Good morning and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. Today we start with a similar tone as yesterday with equity market volatility continuing to dominate. We saw further volatility and that was on the back of continuing concerns around the pace of higher interest rates and what that means for global demand and global growth, as well as those inflationary pressures remaining high. And so that a similar theme to what we've heard year to date, and that's creating volatility in those areas of the markets, especially those areas where there's higher valuations, so pockets of the US market. In terms of US equities yesterday, it was that region where we saw the steepest falls, and that was led by energy, real estate and technology sectors. Energy underperforming with oil price down over 5%. Oil was weaker with concerns around global demand, with China lockdowns continuing due to COVID, as well as still no agreement within Europe for banning Russian oil. So we saw weakness in the oil price that fed through to weaker performance from oil stocks. There were pockets of relative outperformance. We saw defensive equities doing well, consumer staples delivering a positive return and utilities doing okay as well. So there are, despite all the volatility, there are areas that are doing delivering positive returns. UK stocks were also down, not as bad as the US and Europe, so continuing their theme this year of outperformance. In terms of data, oil price came through and that was falling, and that should ease some of the inflationary pressures if that continues. But really around global demand, we saw evidence that global demand and global growth remains robust. If we looked at the data coming through on Monday, where Chinese export growth continued to deliver a better than expected and a positive number of 3.9%, as well as in Korea, a big manufacturing hub and really a big player on the global stage in terms of manufacturing, and their export growth continued to show healthy signs, which is a real positive. In terms of, a lot of the headlines will be on equities, as they always are, but we are multi-asset investors, and really it paid to being exposed to different asset classes and being diversified yesterday, taking away from some of that equity market volatility. What we saw in government bonds, we saw strong returns from government bonds here in the UK and especially in the US, and really helping to smooth out some of that market volatility in stocks. Elsewhere, really front and centre of everything is the direction of interest rates. We saw last week from the Bank of England, they raised interest rates by 0.25%. We heard from one of the committee members yesterday, Michael Saunders, very much talked about the continuation of higher interest rates. In his opinion only, they need to be sooner and at a faster pace should inflation expectations begin to rise, and really to help mitigate the costs in the future. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.